Welcome to the Twomey Stock Market Report. Today is Wednesday, May 11th, 2022, and I'm James Twomey. Last couple of segments, we talked about where you should choose your entries and exit. We went over a couple of stocks and a couple of new ones. So today I want to recap the last two with some real-world examples. So we'll call this segment Technical Indicators Continued. Right? And when we left off yesterday, we said, there's going to be some news, the CPI numbers coming out. And a lot of times we talk about when we develop our trading investment process or tips, Twomey's investment process, right? We want to look at multiple things, but also the noise. We need to filter out the noise. Was the number coming out today important? Absolutely. But was it going to be an impact like the Fed raising rates last time? It was one day blip up and then one day blip down. So you have to be careful that news can give you an effect. Is it going to be positive, negative? Hard to say. In fact, when I got up this morning early, I'm looking at the futures. Dow was up pushing near 300 and plus. The CPI number came out. The inflation was still a little bit higher. And sure enough, the futures came down. They bounced back up. And then obviously we know where it ended for the day. So keeping that philosophy, and how does that affect our investment and then technical indicators? So I'm going to come at it from a different angle today. All right, so we talked about our Twomey investment process, how often we can develop a bias. I'm going to give you a real good example of that. If you listened to yesterday's segment, I'll be able to show you in real time and how it affected me. We try to choose exit and entry. We have short-term and long-term analysis. We have technical indicators. We use those technical indicators to help us either prove our what we've identified as our process, or disprove, right? Because we can develop a bias, and if we have a bias or we're leaning one way over the other, we can often miss what the market is telling us. We need to follow the direction of the market to some extent, but we also have to have the market tell us how we should invest or take stops or profits. Couple of news flash items first. Let's see. Do we have something? Oh, no. Okay, we covered that. Okay, news flash. The NASDAQ from its last high off 29%. This is as of today. The Dow 14. The SPY off 18. I use IWM for the small caps, off 30% from the last highs. Last highs weren't that far from the beginning of this year, by the way. So let's look at from, the last highs of 2022. The NASDAQ minus 23, the Dow minus 14, the SPY minus 18, the small caps minus 25. What am I trying to tell you? Technically, the pundits will tell you a bear market is minus 20, right? A correction is minus 10. What I often find, and this is through experience, it's not scientific. I wish I could prove it out with some regression analysis. But with that said, typically once one industry indice of the four heads a certain direction, up or down, before a major correction or reversal or change, the rest of the indices pretty much follow suit and get near. What I'm trying to say here, when we see things like minus 30 for the small caps and almost minus 30 for the NASDAQ, and you look at the Dow and SPY is only minus 14, minus 18, it's a guess. The probability is probably high that the Diamond and SPY are going to head lower and catch up with the NASDAQ and the small caps. Okay. Can't guarantee that, but that's, again, a bias. So there you go. But it should be part of our trading process. So this is impactful numbers when you take a step back and look at it. I've been tracking it all year. This last week and a half, this is really starting to scare, when I use the word scare, a lot of people out there. I mean, I listen to everything the last couple of days, different channels, it doesn't matter. Everybody is just saying, take a step back, because no matter what stock or indice or mutual fund, it's being sold. No matter what sector, it's being sold. I think energy was the only thing that was up this today. So what's that saying? The baby, throw out the baby with the bathwater. When the drain is draining, can you be the last guy selling? You could be, but you know what? You can always get back in. Newsflash continued. The tech sector is showing signs of contraction. I've been trying to watch this because when you have high inflation and the Fed being as far behind as it is, we knowing that they have to raise rates. I keep bringing up the example of how Greenspan was really quick to raise rates, almost to the point where everybody's saying he's raising to go overshooting. He was really, he called exuberance, irrational exuberance in the stock market, specifically the NASDAQ. He was trying to pinprick the bubble, okay? But what a couple things happened. When you have, if inflation gets too high, economy gets overheated, things slow down, and if they have to slow down really quickly, quote unquote, a recession can happen. We already had a negative GDP last month. Companies pulling the horns, I've said this before, and then they can potentially stop hiring and then laying off. And what's that saying? It's a recession when my neighbor gets laid off. It's a depression when I get laid off. All right. So Facebook announced that they're going to pause hiring. They're scaling down recruitment plans. That was an internal memo. It's real. Amazon CFO told analysts that the company's on his earnings call that its warehouse has become overstaffed. They have too many people. They're going to stop hiring in those capacities in other areas. Uber CEO told their employees that they're going to treat the hiring as a privilege, and they're going to be very deliberate on when and where headcount is added, and then they're even going to be hardcore about costs across the board. Obviously, these, heads of state, if you will, they're looking at the balance sheet, they're looking at incoming revenue, sales, whatever, cost. I mean, what do you call that? When not the standard of living, but the minimum wage has gone up dramatically. To need to hire people had to really increase their wages and benefits. The cost of doing business has gone up. Not to mention they can't get raw materials, and they're competing to be the guy to get whatever's out there. Retail brokerage Robinhood said it's recently cutting 9% of full-time employees. So this is the tech sector. 30, what was it down? I try not to minus 29% stock-wise. The tech sector is feeling that pain. They're starting to pull in their horns. If they start laying off people, watch out. I think it was Kramer, or somebody on CNBC, anyways, that they were saying how they feel that the tech sector has got enough people, and the engineers are overhired. They don't need them. Time will tell. Newsflash continued. This I found. I think this was the last couple of days, but Goldman Sachs, U.S. equity mutual funds and exchange-traded funds notched $37 billion in outflows, $37 billion in outflow over the past 4 weeks. That's the biggest decline over 4 weeks since 2018. I don't care since when, but that's astronomical. That tells people are running for the exits. And what happens when they run for the exit? Sell no matter what, as long as I'm out. Prices drop fast. The analysts for Deutsche Bank, April, forecast a recession accompanied by a 20% drop in the S&P in 2023. Bank of America Global Research Strategist, and they've been way ahead on this, warned of a rate shock, predicting the current decline of stocks will continue. Rate shock, I'm not sure necessarily about rate. They're saying rates all across the board for lending is going up. If they're saying 20% drop in the S&P in 2023, well, the S&P is down 18% from its highs and 18% this year. Yeah, does that mean they're another 20% on top of where we are now? I don't know. That wasn't clear. Uh, so before we get into some specific stocks, real quick, Twomey investment process, we look at the general market trend up or down, pretty straightforward. Economic conditions, we also look at environmental factors, Fed, government regulation, tax philosophy. Case in point, they're talking about reducing the 18-cent per gallon federal tax rate, eliminating that on gas to bring the gasoline down. They've been dropping out the strategic reserves. All these things have limited impact, but certainly if the price of that commodity comes down at the pump, it's good because people are spending less on that particular item because they can spend it elsewhere. These are the kind of things. So will that affect the price of the futures for oil or natural gas? So you got to keep that in mind. We create our strategy, but we're creating biases at that time. So and then we develop our short-term trading philosophy. We talked about CPI already. We use the relative strength index, stochastic, MACD, and what we're going to do is take a look at some stocks here today. I want to start with SCO. That was the inverse of the long oil. It's 2 times, right? So in other words, it moves twice. If oil USO goes up 1, SCO should basically double, right? So it's fast moving, it's quick. That was a low cost one, and this is one that I wanted to give an example yesterday. I told I had gotten in. I'm out now, okay? But this is one where I said the technical indicators weren't there. Remember yesterday and the day before I was buying, I bought it when it was low, 5.1 or 5, and I'm out at 4.9 and pennies. Basically, lost a few $100 on a $5 stock. You can buy a lot of it, but also too, if it drops half a point and you bought 1,000 shares, serious coin, and it's out of your pocket. You can't get it back unless you get another investment. Okay. So what I was saying here, I said, geez, this is the daily trend now. We go by this, our all in, all out is our 10 EMA and 14 EMA. The 10 EMA was still below. We had a positive on our MACD. This is daily. All right. And oval, let's see. We had a positive there. And we had a positive here, right? Which is now turned into a negative, all at the same time. But let me get to that case in a second, okay? I had looked at shorter time frame to see I'm looking at a daily and that's going up. Is the shorter time frame reversing, right? So that was on the way up. There was a lot the 120 that was on the way up, and then this morning I woke up and it was kind of bouncing all over. I think it was at 1.5.2 or 3, and then it went down to 4.9. This is before the market opened, and I'm saying to myself, with inflation number coming up a little bit higher, I had a false pretense on maybe this oil. I had jumped in before our daily. See, we should have never got in. I should have never got in because I hadn't had confirmation here. And sure enough, I raised my stop rate till I think it was 5, and I put some at 4.9, and I was out right after the open because I had not been patient to wait for this confirmation here. Just because I had 2 out of 3 doesn't mean do it. I took a risk. There was a lot of reason for that. But that shows our technical indicators work, okay? Let's see. We've been looking at, and we didn't cover this yesterday, but we'll do it today. TBF, that's the Barclays 20-year bond. It is the inverse short of the Treasury yield. So as yields go up for a bond, the yields, instead of paying 3%, they're paying 3.5%, 4%, 5%. That means yields are going up. Yields coming down is the reverse of that. If yields go up, this instrument goes up, you make money. The inverse of that, it would be the TLT. As yields come down, your stock goes up. So a little confusing, but overall, this one I've been in the TBT as well as the TBF. TBTs 2 times this, and I saw this high. Remember we talked about it. I said, this thing there's a trend upwards. Then it got steeper, this green line, and then it even got steeper, this blue line. Anything goes straight up, you generally come straight down. So I was saying, are we at a risk? And I'm still in it, but as I look at it today, like I said, I usually on the golf course, I got some things that ticked off today. I'm looking at, I get an alert that says, oh, I sold something. And, I haven't taken a look at this. The first time I've really taken a look at this. Okay, so our daily, even though it has come down, our price is below our 10 EMA alert, right? And it's right at, oh boy, come on. It's just this one. It's right at our 15 EMA, okay? So now, my stop has been pushed up. It's pretty close to this number. I've given myself a little bit of room on this one, but now I look at my MACD. It's turning down, right? Obviously, the stick faster oscillated is down. So 1A alarm, not good. 2 alarm, I'm really interested in potentially getting out of Dodge. And 3, hasn't taken place yet. Let me get this out of here for a second. Hasn't taken place yet. We have not crossed below. The 10 has not come down across the 14. So, I'm probably going to pull my stop back a little bit because I've got a lot of profit. Here's my theory. Until it crosses over, I should stay in. And it could take a while. It could come down to, a little bit further. I look at my relative strength index. I've changed the color to more, royal blue here or purple. It's down. It's coming down. We're at, what's the actual number on it? Today is 64.3. It's 56.99. Over here, a couple of days ago, we were at 73. All right, 70 is our overbought. 30 is our oversold. So we kind of hit that overbought. What did it do? It reversed. So now I'm pretty close to selling here. I'm going to let my third indicator tell me, just like SCO, I wasn't patient. So I'm going to hang in there a little bit longer. I'll probably, if I wake up in the morning, I see it's going to open well below the 15 EMA. I'll probably take a portion of off because I got quite a bit in it. The 60-minute, I look at this and, I've got a heck of an indicator here, right? And it's still holding fast. In other words, it's down, and it's down in there, down near zero. The MACD, the slower oscillator, yep, bang, down. And now, what about up here? It did change. So I did look at this at some point. What date was that? 5/10. Okay, that was as of last night. So 60 is heading down. All right, 120. Yeah, that's yellow is now a red. So, okay, same thing here. We've got our first indicator, our fast oscillator gives us the warning sign. Our slower MACD oscillator is EMA or whatever you want, that, I still call it oscillator, but that is telling us, whoa, guys, you should be selling or thinking about selling. And then finally it crosses up here. I don't trade off the 120. I used to. I just, don't have that kind of time during the day to stay on the graphs that much. But When I do, a lot of times I will, especially if the market's going my way, daily. So if I was advising somebody, I'd say wait for confirmation here because it could be a false. And I'm going to flip over to TBT. TBT is the double of that. I'm out of it. Okay, that kicked off today. I don't know what number. Same scenario there, right? We've got negative, 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 right? Hasn't crossed below, but since it's a 2Xer, I know it moves faster. I don't want to hang around. I had been in it for a long time, way down here. I have no problem booking a profit, even if I miss the next run up by a couple of days. That's okay. That's okay. I can always get back in. But if we look quickly at the 2Xs, I treat a lot different. Confirmation, 60-minute. Yesterday already started telling me things were negative. That's why I didn't, I had a tight stop. 120, had already told me. So when did this happen? This looks like this inverted here. It did. And what was that? That happened yesterday too. And then, of course, today. So if I was advising people, I'd say wait until you get that third, inflection point, because you can go sideways for a while. You can hang in a trade a little bit longer, especially if you got a nice profit hanging here. You might want to take a little bit off here just because of the visuals of the earlier time segment. So that's a great example of our technicals, how to hang in a trade or get out of a trade. Remember we talked about 200 EMA being not once in a lifetime, but it doesn't happen too often when the daily gets down there. There's a couple of rules of thumb and rules of my gut. When good stocks or stocks that have shown tremendous performance, like Microsoft, like Tesla, and a few others, UNH, look at, just go in a blink of an eye right through that 200 EMA, and the markets are down at these numbers that we're talking about. A bear market doesn't spare anybody. It just takes everybody out for a wash. Okay, so let's take it UNH, because that had not hit the 200 EMA. I had moved my buy. I had a buy around here, right? It would have kicked off yesterday, and I had, before yesterday, I dropped it down because I was using this trend line. I call it the Twomey trend track, but lines have been, around since the beginning of stock trading. But with that said, it hadn't reached the 200 EMA. It really hadn't been over, it hadn't hit it for a long time. I was willing to take a risk, but knowing that everything was being sold, I moved it down. And I'm still above the 200 EMA with my buy. Maybe I think it's like at 470. I'm willing to take a risk on this one. It's and if it goes sideways for a while, so be it. But our technicals are down. We've got a negative cross of the 14 and the 15 and the 10. Our relative strength is 37. 30 is oversold. So we're getting there. I'm not, just based on the way the market's going, I'm not going to take the risk. Okay. Verizon is another one we talked about. Listen to my earlier segments. They did a lot about Verizon. Here's a stock that basically goes sideways most of the time. But this one had a juicy dividend. It had already had this huge catastrophic drop. And remember I talked about it. I've been in and out of this the last couple of days. I'm trying to get in, right? This is well below the 200, well below the 50. Our technicals are saying don't buy. There isn't on our daily the Twomey investment process is batting 0 right here. There's no indicator, okay, that I should be touching this. But see, this is where your bias can lose your money. Anyways, with that said, remember yesterday I said I don't use Fibonacci that much because a lot of times it's really way you draw it. It's based on the last high or low and volumes and inflection points. And, to use it accurately, you really know all those details. But, from a gross drawer of the Fibonacci, I said, geez, 0.382, it got up to there. It's kind of like, that's a dead bounce, right? The drop something off the top of the building, it does bounce up, but it doesn't get back to the top, right? So that rubber ball came up. Usually 0.382 is a good place of reversal, and sure enough, it did reverse. So this could be nothing but a dead bounce. I've got to stop down here. I'm going to play with it for a little while. Am I going to hang around? We'll see. We'll see. Would I recommend buying this? If it starts building a case to go sideways, or if you can get it down here, around 45, 46, I'd probably take a nibble at it just because it's got a 5-point-something% dividend. Tesla. And, I know we're repeating a lot of the stocks. I'm going to start going into different trading mechanisms. Tesla, I was in and out of it today. I mean, I got a bing that it was a buy, and it was a couple of holes later. I started laughing. I said, boy, that didn't last long. Because I was looking at the last, kind of low point. So I took a buy. Again, this is the one that was bouncing around the 200, was going sideways. I was in there. I bought it for my kids, everything. I'm like, this. And the market hadn't really had this latest big downdraft the past few weeks, but last week. But anyways, with that said, I tried it again. I had been stopped out. And I said, I want to get in around this inflection point here. Well, you can see with this green line of support, it was not supported, blew right by there. None of our technicals are on our side on the daily. Now well below the 200. Even if it gets up there, it's going to, it has to deal with resistance at the 10 and then the 15 and the 200. So the next inflection point, I'm just going to move this down, is probably here. I did put another buy in down around 710. We'll see what happens. We talked about Verizon, UNH, Tesla. Those again. All right, so let's go to some areas that we can trade. Right? Remember we had talked about it yesterday about the QQQ, and I had said, geez, I see how you're supposed to go in here, when it crossed down. But, I've been adding to it every time that the NASDAQ kind of pops up in the morning. In the bear market, typically what happens in the morning, you get a nice pop, and then it wanes and it destroys later in the afternoon. When the buying comes in at the end of the day and it props up the market, then you might be looking at either sideways or a trend reversal. So bear markets should happen to behave that way. So in the morning, if things are popping, I'll take a nibble and I'll keep adding to my position. That new position, I'll have obviously a tighter stop. My core position kind of has a little bit wider stop, and bingo, I'm in the game. And I'm also adding. But I'm in the QIDs, which is 2x. But anyways, when you look at this, right, you're saying, I think the other day I was like, it came down, hit this kind of low, 1, 2, 3. That was the kind of the fourth low, and I was buying some, and I'm like, if you don't look to the right here, if you can kind of just block it out of your head, you say, geez, should I go in? There was some pain of reversal going up, but as it comes down, sure is. I mean, we've got another, we've got a inflection point here. We've got an inflection point down here. It's nasty. So it's an elevator ride down. This chart on Schwab has a real delay. We're looking at the weekly straight down. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. 6 days down. You start. That's all. Some people will say anywhere from 7 to 9. Lows or ups. You're gonna, just naturally for some kind of sequence that's out there, you'll see a reversal. So are we getting near reversal? I don't know. Hard to say. I look at this 1-to-1 here from this top to this bottom. Then we had the inflection point back up here. Yeah, it's almost 1-to-1 extension. So yeah, it could be ready for a bounce. But I've seen this before. If it gets down around here, what's the last? Well, the next major inflection point is here, and that's at 267, and we're at 291. Then there's one below there at 265, and then all the way down here to 167. Oh, boy, I don't know. I mean, this could just, until it goes sideways, it's a buy in my mind. So what we were using the PSQs, right? So should you get in now if you don't have a position? 2 highs, 3 highs, 4 highs, 5 highs, 6, 7 highs. We're getting, this is very similar to TBT we saw. This is a straight parabolic up the last couple of days. If you do get in, I don't know. I think you're going to have a hard time, I mean, this market, there's no prisons in this market. I would put my buy-in down here around the 10 EMA, and that's at 13.47, and see if it comes down, meet you there. Because if it does, and it blows past that the next couple of days, then you're not really losing that much. So I would just put it, if you want to be aggressive, a tad of, the last couple of lows there, 13.5. And then small position, you can always add to it. The 50 cross above the 200. Inverses don't necessarily, they're not really 1-to-1 with the, when I say 1-to-1, the graph connotations. But this is what they call a golden cross. Generally, the market's supposed to go up from there if you have a golden cross. So that's a good sign. Anyways, let's look at our short time frames, right? Short time frames, we're still positive here in the 60. This is negative, but we're still positive here. And the 10 EMA, we're still positive there. Let's go to the 120. Is it still? Yeah, still heading in the same direction. Let me get rid of that. Is it extended? Yeah. There's the 13.84 is the 10 EMA. That might be a good entry point. And then you take it from there, right? So, but positive. So the 120 is still heading up. The daily, all our stochastic, everything's saying it's positive. There may be a brief hold if you go long, but hey, you got nothing. Everything's going in your direction. Let's be same for the weekly. We're in good shape there. Let's just look at the relative strength index. Do I have it on here? I do. All right. Relative strength. Boy, that's a tough one. 6709. We're getting near overbought. So, buyer beware. So if you do get in, let's be careful. Another one you should be looking at is SH, is this, the short. And again, it's all the same thing. Look at this. Trend line, and then it got steeper, right? Just like the TBT, what goes up straight often comes down straight. All our technicals are on our side. Short term, what's going on? Is anything changing? Well, this is, it had a reversal, and then then it went positive on our MACD, our slower oscillator, if you will. And then what's going on in our fast? Same, it's bumped up and it's high. This is above zero. And then what's going on here? We still have a very positive divergence between the 10 and the 14, and our stock's way above it. And on this short term, it's acting as support. What's our relative strength index number? Come on, 65. So that's showing overbought. 120. Same, all the all positive relative strength index. If you do go in, you're going to have to say to yourself, all right, if I wait, I got to buy in here at my, let's call it this is SH, the short of the SPY. Put your buy in at 15.53, see if it ticks off. And, if you wake up tomorrow and before the market opens, it's below that, take a step back. 15.53, you got to give it some room. So you'd have to say 15 point. I'd go down all the way down here to the the EMA, the 15 EMA. So which is 15.31. So I'd give it to like 15.25. So and if so, there you go. You got to buy in at 15.6, and then you've got your stop 15.2. Okay. Have we got room to grow? Potentially. We've blown through this high, right? We blew through that high, and then we came up and we even exceeded this high. So we're showing that stair step increase. It's been very steep here, but this is the weekly chart now. Monthly, does it tell us anything? Just starting to turn up, believe it or not. What the heck did it do last recession? Last recession, 2007, we had, I don't know if this, it had any splits a lot of times when, these, but anyways, with that said, we had a high of 199. So, will it repeat that and get up that area? I don't know. But this is the monthly now. So we've broken through the last couple of highs. The next, area where things went a little sideways for a while is 17.9. So we got a chance. You think 16 to 18 is not out of the question. Then the next one would be 21. The reverse of that is to come down, and at this inflection would be 13.78. So that gives you some idea about your risk. But if you have a tight stop in the daily, on shorts, I like to go when the market's up. So if you see the market up, fairly good at the end of the day tomorrow, and you haven't gotten in, your buy hasn't kicked off, hold back, see if the next day there's any confirmation, and if the market goes up, let it run a couple of days, and then you could, reshort. I don't think this market's going to change overnight, but we could get that bounce, just like we saw in Verizon, right? You get that bounce, and it's a dead bounce. It goes up, but it's only for a short period of time. So it's an exact science. When we're at these parabolic moves, I can't say, but I'd start looking at those. Was it UNG, natural gas? That's the one I was in and out, right? I'm back in. I've been trying. I even bought a little bit today. This is going to be interesting because technical indicator negative is trying to fight up. This is a fast oscillator. This is negative, but this keep staying in the trade would be until this inflection point. In the 9 EMA, the 10 EMA, and the 15 EMA, the 10 is still above the 15. It hasn't crossed down below. It's getting close. Typically, when I see, I call it the seahorse pattern. I don't know. To me, I think it's like the serpent is breaking out of the water. It sticks up its, that's the head, and it's like, this is the big coming up for a gulp of air, and oftentimes I see that breaks and goes above again, back up to the top of the head, if you will. So I usually look at that as bullish. But when it's been highs like this, parabolic highs like this, you're going to get that short bump, and then it just continues down. So it's I just told you the market could go up or down. That's not really insightful. But with that said, I'm back in it. I got my stop. Where's my stop? It would be probably down here. I'm going to give it some time to run. So 24. I don't know where it's going to go, but I'm back in it. I had quite a bit of profit because I was in it when it was low. Was the short term telling us? Is it giving me any indicator? Well, that was the reason, right? Short oscillator, big up, and it's way up here in the 90s. MACD, positive, and positive here. That's the short term. So the short term is telling me things are going up, even though the daily was going down. The 120, positive, almost, it's a warning sign that it could be going positive or get deflected back. No confirmation here on the 10 and 15. So I'm close, but the 120 hasn't, sold me. And the daily, again, like this inverse on the oil, I got in, and I'm just, the reason why I did was because we haven't had any. Am I in a little early, like the short on the oil? I don't think so, because we don't have the confirmation here yet on the daily. But it's the last thing to wait. Everything else is telling me don't trade, except for the 60-minute is getting positive again. So maybe the bet is it's going to inflect. So, I would put my buy in around, depending what tomorrow is, 25. If it comes back there. If not, and it breaks up above that, you got to chase it a little bit up to the 9 EMA, the 10 EMA up here, which is 26.3. So I'd put my buy in at right now 25 and see what happens. And if you do get it, I'd put my stop here down at 22.9. 23 to 25, you get 2 points there. That's a bigger risk than you want, but you got to give it room. All right, so that was that one. What else? So I would take a look. The Qs are very depressed. The IWM, was it the RWM? Russell short. Yeah, I trade the TWM, right? All right, so this is the same thing. They're all the same, right? This is 1, 2, 3, 4, 5. Again, what is the relative strength index? That's at 67 almost. So oversold, could be parabolic move. Everything's positive. What's the short term telling me? Is it telling me anything different? Positive. Just turned back up positive 120. Is that telling me anything? Positive. All right, so Russell is the weakest of all, the earliest downturn. Does it get more to go? Yeah, I think we'll have a pullback first, but if you want to get in here, take a nibble, I would put your buy in at 24.9, 24.96 if you want. And then if it does kick off, I'd put my stop right here. I wouldn't hang around too much. So you got a big 24.3. If you get it in at 25, 24.9, you got a couple points that you're at risk, but you'd get in the game. This could be kind of short-lived as well. The market is telling us it needs a breather. On the short side, that is, okay? But we haven't seen it. The IWM, last couple of weeks, this has just been devastating. They all look the same. And it's hard to buy when the market's going straight down. It really is. But when's the next inflection point? It's down here, 150 for the IWM, right? And then below that, 140. Are we going to go all the way back to here? 100? And what date was that? That was 3/23/2020. I don't know. Look at this sideways. There's a lot of buyers, sellers here. A lot of buyers, sellers here. I was I was going to, put a gun to my head, I think 160 it could possibly be there. So there's some ideas. We're going to come back and revisit those. In the meantime, I think what we should do based on the market is take a look and trade the indices. If the market pops up for a couple of days, a good opportunity to start thinking about getting short unless there's a runaway train. So let's leave it there. Look for the next segment, and hopefully we'll get deeper in the weeds with some actual stocks that you could trade other than the ones we've been rehashing over and over, right? I'm James Twomey. You can be reached at jim.net, search at comcast.net. As I say always, we're in the stock market to make money. That's as simple as it gets and as hard as it gets. If we're in a trade, you've got to have your stop. If your stop kicks off, you can get to fight another day. I've talked to some gal today. She was in some stock, esoteric stock. I finally got and pronounce that word. It was a low number. It was 3, 4, 5, or 6, or 7 when she got in. And when she got in, it was like 7 or 9. And it's now at 3. Terrific. But they got married to the stock. Doesn't make them a bad person. We all do it. It's happened to me, and it still happens to me. Get married to the stock, our bias takes over, or we can't pull the trigger to get out. Put the stop in. That tells you get out. If you want to get in and keep playing like I'm doing with Tesla and Verizon, I'm back in XLU by the utilities. That's okay. I mean, it was that saying, catching falling knives. Just at some point, you have to say to yourself, I'm going to wait on the sidelines till things change. So anyways, if you get a stock, you want some entry or exits, if you're in it, let me know what it is. Just email me. If you want to get some more help with the stochastics and the MACD, the EMAs on the daily charts, if you've got some kind of charting system, if you want to understand it better, email me. If it's something we can do on a phone call, I'm glad to get on the phone and chat with you about it. All right. Before we go, I know this extending, and I'm not sure if people really want to listen as long as I'm talking, but XLU is the utility stock. We've had a lot of discussion about that. See, it's basically going sideways. Sideways, anything can happen, right? If you look at it, we had here to here, high to low, and then if it breaks down, right, from the latest high, it could, a 1-to-1 extension down below. This is all kind of like Fibonacci stuff, but I just try to simplify it because I'm not really good with Fibonacci. If it breaks up, now the opposite could happen. It could be something that goes like up there. But in the meantime, since the bias has been down, I'm going to look at this as the next leg down here. This is the one that we're looking at, the 200 EMA, right? Everything up here says don't buy. This is turning a little bit positive. This is way negative. I mean, everything's saying stay away from it. What's our 60-minute doing? Well, that's positive, negative, a quick oscillator. This went up, had a brief up, and now it's kind of flattening out. Look at this. I hadn't looked at this today. The 10 crossed over the 15, positive. This is way down. Boy, there's a lot of buying and selling. This is, for this indice or ETF, this is a lot of movement, even a sideways movement. Okay, our 120, what's going on here? Negative. Looks like this histogram's kind of hiding everything. But anyways, volume graph. That looks positive, green. They're basically side by side, so it's kind of leaning towards the positivity. Has not transferred to the daily. I don't mind if this goes sideways on a minute and it stays above the 200 EMA. This is, again, my bias is taking over. I'm thinking even if it hits the 200 EMA, it's going to bounce off real quick, just the way utilities are going. I could be wrong. And if I'm wrong, I'm wasting quite a bit because my stop is, the the last low now, 69.7. I'm in at 71 or whatever it was today. 70. It kicked off again today. So that's one you want to take a look at and you want to play with. That's great. I would put my buy in down here on the 120. Where are we? I would put my buy down here at 70.7, 70.5. I would come in at, where's 70.5? The low of yesterday was today was 70.7. Previous low to that, 70.4. And then down here is 70. So I would go in at 70.4. That's where I put my buy. And then if it ticks off, and you're probably going to get stopped out pretty fast, I would put my stop at 69.5. It should be below that. It's just a shade below that last major low. And then, of course, if it gets to near the 200 EMA, I have buys all around here, 69.5, right above the 200 EMA. And then that, does it do what Tesla did and Microsoft, blows right by it and doesn't look back, or does it use this springboard? Again, in a normal market, if things kind of retreat in a correctional situation, and I guess near the 200 EMA, often we see a nice pop. In a bear market, blows by the 50, it blows by the 200 EMA. I know a lot of people out there that just trade off the 50, and that they would have got out here anyways. My system, if you were in, let's say down here at lows, would have got you out up here, right? Others wait till the 50 gets crossed down. We would have got out up here. That's 74 to whenever it got down to the 50, 72, 71, So our system works. It works. It saves you some money. All righty. Well, thank you for listening. James Twomey. This is the Twomey Stock Market Report, and we'll see what the next couple of days bring, but definitely we'll get you something out over the weekend. Hit the like button, refer it to your friends. Let's get this word out. My system is free. I'm not propagating anything. Some of the systems I use, that's my preference. I'm not selling anything. This is free information. It's the basement tapes report. We don't have high video production. We're sitting around the kitchen table having a cup of coffee, chatting about stocks and trying to come up with a system to trade with. I think for now, during some of these downdrafts until the market pumps up a little bit, let's stick with the short ETFs. I think we're kind of living dangerously because there should be a bump coming, but I'll let the market and our technicals tell us that. All righty. Have a great day. Thank you so much. Bye now.